Hey ForexMilitia, Parcival here, and we are going to go over the calendar for the week of the 30th to the 4th. This week is an NFP week. We get news on the US unemployment, right? But that's because I'm here in the US. We also get on Monday, look at this, the Aussie cash rate. Now, this looks like the 31st for us, but I believe it's the 1st for them. So it's the 1st of February where they're at. So it's really not in January. All right, we get the CAD GDP. We get unemployment from the Kiwi, and then we get the ADP from the U.S. and the Bank of Canada speaks, and then we get lots of monetary. You get the bank rate on Thursday from the pound, and the ECB. The ECB will be giving it so pound and euro, and ISM and the ISM PMI, and like I said before, the unemployment rate. Employment change and unemployment rate. Let me see. Yeah, unemployment claims on Thursday. Okay, so there you go. Basically, and the CAD on Friday, the IBPMI. All right. So with that right there, we are going to go to the charts, and we are going to take a look, see which direction some of the currencies are going. Alright, starting out with the dollar. We have the dollar basically breaking out of this wedge, going higher. It's about to reach that little area that I was talking about how many months ago. Alright, and with what the Fed is basically doing, tightening. People who have margin and stuff like that, or the big banks, they are lowering their position sizes. But the other thing is, whenever a currency's interest rate gets raised, people want to put their large sums of money where the highest interest rates are. And so the dollar will be up there with some of the other currencies that are, and actually look at that. It will be one of the highest. It'll be from 50 to, from 25 to 50. So it'll be higher than the CAD and higher than the pound, but not higher than the than the Kiwi. Than the Kiwi. So that's something. So people are going to want to flock into the dollar because it is, it's a carry trade. All right. So they're buying it up right now before all that interest basically comes in, and they're going to just sit on some dollars and collect some interest with their big bucks. All right. The S&P 500, it's still long in the long run, right? It's pulling back, as you can see. It pulled back to 42.90. Found a little bit of support. You see this big wick here. I don't know what's going to happen because right now there's a rotation. People are, as I said before, are most likely coming out of the market because of they were trading on margin, and with the increased interest that is coming down the pipeline, they don't want to be exposed to that. They would rather be in the carry trade of the dollar than having to pay finance charges at a higher rate. So the S&P 500 right now, I am neutral on. I'm not sure exactly what it's going to do. So most likely it'll probably range a bit before I can basically make a decision on which way it's going to go. All right, gold. Gold is still inside this wedge right here. It basically hit this high at 1850, and it basically, you see the large bar. This is looking very bearish. I've been bearish on gold for a while. and I am going to be looking for it to break down below this wedge right here at 1775, 76, and then to basically hit this support, this monthly support down here at 1750. So I'm going to be bearish, and the sentiment on this right now is flat or neutral. For Bitcoin, Bitcoin basically has hit a point of support. I didn't draw that in, but this area is basically a point of support. As you can see back here, way back in June, July, August, pretty much June, July, and August, May, June, July, and before it actually rallied, it was at this support right here. So from here, I think it's going to basically just end up ranging a little bit before it actually, and the way how I'm seeing it, it's probably going to break down. So I am going to be looking for Bitcoin to continue downward, right down here to about 1800, about this range. So it's gonna lose a bit more. It's gonna be half of what it is today. All right, oil broke out of the wedge, and it broke out of a monthly resistance. So sky's the limit, and this thing is probably, I got a target up here at 103.95. Wow, that would be insane and very bad for people, especially going into the summertime. Oh boy, they want to travel and stuff like that. Very bad. Higher gas costs. I mean, yeah, price on oil, and pretty bad. All right, for the loonie is still in this wedge right here, and right now I believe from what my indicators are telling me, it's going to continue to range, but it's going to probably be bullish. As you can see, the sentiment on this is bullish. On the euro just broke down below the wedge. It is now looking to target 107.65. So that's about 300, 400 pips lower. That's a nice little range right there. All right. I don't know if it'll. I'm going to stick with the sentiment and the trend. You see this trend line also. If it breaks that, I will basically go bullish, because it did break below this trend line, the bottom trend line. So that's a breakout. And also, it also broke below a fractal support. So it broke below two basically areas of support that I use. All right, it found some support actually at this Fibonacci extension at the 50, but most likely it's going to find the real support down here at 110.39 or 110.50, around that area. So that's that. The pound, and the pound is also short. Most likely coming, both the euro and the pound coming from dollar strength. So they will be falling down to an area. This one, we are looking for it to hit 132, 130, somewhere in this range. I don't see a break of my super trend, so there's no real targets that I can draw on the weekly right now. So yeah, if anything, there is also a point down here, 128.88, that it can basically hit also. Okay, so that will do it for the weekly outlook on some of the currencies that I am basically following. And now let's get over to TradeMiner 5.0 for some Forex and stock ideas for the week. Okay, this is TradeMiner 5.0 Forex, and we've got this week a bullish Swissy, basically from January the 31st to February the 9th. I did not run this through the neural network. Okay, anyway, so the win rate is 100, and this is the score on this is 3.97. So that's pretty decent. That's the scoring method, basically. As long as the score is above 3.0, it is green. So I took this one. This was green, and it's for the last 5 years, 80%. And then for stocks, we've got bullish American Express. Now, what I'm going to do from now on is I'm going to basically just target the Dow 30, just the stocks that are in the average, and I'm going to just target those. And this one is bullish for the last 12 years at an 83.3% win rate. Okay, in the time frame of the 31st to the 24th. All right, so that's and I put the parameters a little bit longer than I normally do, from 15 to 25 trading days. Basically, about a month. All right. So let's go ahead and take a look at the chart and see what we can see what it looks like as far as technically it goes. All right. So we got an open. The open is over here, and this is looking bearish, right? Now you can hardly see this. There's a green line down here. Maybe I'll change the color another day, but right now there's a green line down here. So on the short-term time frame, it is bullish, but on the longer time frame, which is the weekly, it is bearish. So I'm gonna, like this in this cycle, I'm going to go in half for the blind trade, for just the blind trade idea, right? And then if it actually goes above here, I'll see about getting in on the other half. But on this one, I'm going to go in on half on the Swissy and see where it actually takes me. All right. And then American Express. And we got this. Now, look at this one. On the longer time frame, it's long. But on the shorter time frame, it is short. But American Express is bullish. So if it basically comes above here, I'll go in on that'll be the technical trade that I basically take. But once again, I'm going to go in on half on the 31st for the blind trade idea from TradeMiner and see exactly where that actually goes. All right. So those are the picks. Now let's get over to a review. Alright, so last week we basically went to bearish pound, right? Bearish pound, and we had a bearish West Rock company. Now, you won't see companies like this anymore. You know, I'm definitely just going to end up just going with the Dow. This company you won't see the fringe companies anymore. Who knows what company that they are. So I try to put a joke in there. Yeah. All right. So anyway, let's go over to the review. And work right now is short right now, and this is basically is at a loss right now. It was I'm telling you, during the week it was in a gain of about $200, but the end of the week just killed all those gains, and now we're at a loss. Okay, but the pound, on the other hand, as you can see, it's kind of evening itself out. Our profit for these three trades are actually at flat. The other one, let me see about this one. I took a trade on that, but I'm not sure exactly if that was a trade that was supposed to be on from TradeMiner. I don't think I marked it off. But this right here, these two, they are canceling each other out. The pound is doing really, really good. And as I went over in the on the charts, the pound should continue to basically fall. All right, so let's just quickly take a look at that on the chart. The pound it should continue to fall, and there it goes. That's what I'm looking for. And this is going to come out on February the 8th. Okay, so we've got about a whole nother week before that actually comes out. Next Monday or something like that. All right, and so let's take a look at this one. And I think I just took this trade because I saw a good setup. And so far, as you could see, it's only $4. Not much. It's not a huge position. 1,000. You know, I took this one at 10,000, so that's like 110. So if I took 10,000, this would be about $40. All right. So that's basically about it for this week. Always trying to keep it a little bit shorter. And I will say, as always, knowledge is power. Be power hungry and power to the people. This is Parsible, signing out.